Hi, I'm Nick Hubble, an editor at Fat Tail Daily, and I'm standing in today for your usual host, James Woodburn. Woody's gallivanting around the UK on what he claims is a business trip, and he was mad enough to leave me in charge of this video. Who knows, if this goes badly enough, he might not come back at all. I'm joined today by our geology and mining expert, James Cooper. James, your piece for the Fat Tail Daily this week goes on about your background a bit. I had no idea that you used to be a rock star.
Yeah, that's right. Thanks, Nick. I've gone into my background. I think I've been at Fat Tail for almost 2 years now, and I've never actually explained what a geologist does and what a geologist is. So there's different forms of geologists. I don't know if you want me to go into all those details today, but I think most people think of geologists as these, I guess perhaps people that go out in the bush, look at a few rocks, and maybe make a discovery once in a while. But in reality, the industry has advanced from that point. There's a lot more technology involved in hunting for ore deposits, but also geologists are not just involved in that early exploration. It's also a process of following through to resource development. So that might include drill out, infill drilling, but also mining. So a lot of geologists are actually involved with the mining process as well. So I guess I can go into all those details. The geologists, all through those steps, are pretty heavily involved. So let's say a resource drill out. This just involves a lot of infill drilling. So trying to fill in those gaps left by the explorers. So you might have uncovered the deposit through exploration drilling, but there could be sort of a, say, 100 or 150 meter gap. So the resource geologists come in and fill in that gap, put the model together, the resource, and try to estimate the precise size of that deposit. And then that goes through to mining. So that's when the geologists will basically tell the excavators or the blast teams where to mine next. So that could be a matter of chasing a vein. So if you're in a gold deposit, you might be looking at where that structure or that mineralization is hosted. So if that's a quartz vein or if it's a shear, so you need a geologist to sort of track that, map it out, and make sure the excavation team is actually mining ore, not just waste, because obviously that's going to get a little bit expensive. Geologists are involved through the whole process from the very grassroots through to production.
What I was really surprised to learn about is how imprecise and how much of a game of probabilities and chance and managing the risk that you will or won't find something, all of this is. It seems to me that even if a geologist does their job properly, there's still a slim chance of a real success. How do you manage that in your career, and how do mining companies manage that?
Yeah, so it's a really good question. It does obviously involve a combination of all three things. Luck does play a big part of it. I think if you look at some of these projects and perhaps they've found a discovery on their first or second hole, I think you can put a lot of that down to luck. The reality is drilling is really just opening the door to sort of more avenues of where that deposit might be. So exploration teams tend to take years of follow-up programs, of follow-up drilling and lots of work, basically just finding clues which eventually lead to that discovery. So I think it's really does come down to brains, but obviously when you're dealing with sort of a natural formation, which is geology, you do need to have luck on your side as well. Obviously, technology as well is really playing an important role. Geologists, I think, traditionally have been thought of these sort of almost archaic profession where they go out in the field and they go around with a pick or a hammer and knock rocks off some outcrop. To an extent, that's still true, but that's sort of more the field work aspect in terms of the analytics. So just analysing all that information that's where you've sort of seen some big changes in the technology. So software, there's AI integration happening in exploration. So you have sort of AI pulling together all the data and just helping geologists to sort of streamline their workload. So maybe putting that information, all that data, which would take a traditional geologist months to sort of refine, it can sort of condense it into just a few days. So it's making the whole process more efficient.
Did the traditional geologists ever make a complete mess of things and completely miss a massive deposit that was there all along? They just didn't quite drill the right way?
Yeah, so that certainly happens. It's what we would call sterilization drilling. So imagine a project is going to get developed. You build your processing plant, which is often pretty close to a deposit. As part of that process, the geologist will drill where that infrastructure has to be built.
Really?
More often than, or sometimes, they don't drill deep enough. So it may be just this blanket number of, say, let's drill to 100 meters, but you could have a deposit at 150 meters. So there's been a few occasions where you might have a deposit that was later to be found underneath all the processing equipment, and that's surprisingly happened quite more often than not. So it certainly happens.
One of the things I was really shocked to learn about here is the fact that you claim, at least, that geologists like to underestimate the size of the deposit they've found. I thought they were all drilling these director's specials where they make the deposit look as big as possible by drilling, right down the length of it instead of drilling across it to try and establish just how big it is. But you say that there's a strategic reason to underestimate the size of your deposit. So take us through that.
Yes, I think if you're looking at the more early stage exploration, I mean, it's certainly true, the director's special, that unfortunately happens in the industry, and there's certainly an embellishment in company reports to perhaps over-report at times. And that probably happens in the early stages, just remembering these companies rely on shareholder capital to sort of fund these exploration programs. So without this constant supply of good news coming through, capital potentially dries up and exploration might grind to a halt. But with that in mind, I think when a project does progress, this is when you do need to sort of start being careful and not overestimating what your potential resource holds. So this is when you might start to see the resource geologists move in and sort of take over more the exploration role. So that just means this sort of infill drilling, trying to determine the precise size of the deposit. So you might be looking at a project with a fairly narrow spaced drill program, just to sort of shore up the information between each drill hole, because there can be quite a lot of variability, but that depends on the type of deposit. So when you get to that stage, you definitely want a project to perhaps underestimate rather than overestimate, because if you're a resource geologist and you're putting out these calculations which perhaps overestimate a project, well, that can have long-term implications for the miners and for the feasibility of the project if it's sort of grossly overestimated. So this is just where you need enough information to shore up any uncertainties in the geology and just build, I guess, an accurate model that perhaps leans more on underestimating rather than overestimating.
I guess the key to your article here is the idea that it's the exploration geologists who might hold a bit of a signal for investors, a way to interpret the fate of the career of the exploration geologist, because that sector of the mining industry is more volatile than the other parts. So take us through how you notice what's going on in the career market for exploration geologists, what's going on in the exploration expenditure side of things across the miners, and how you use that as a signal for when to invest in what type of stock.
Yeah, so for sure. So I've spent most of my career as a geologist in exploration. So that's been my main interest, and it's being out in the field, being part of discoveries is really an exciting process. But the pitfalls of that, you've got to remember that exploration, I guess, is almost like the equivalent of, say, an R&D, the research and development of, say, a pharmaceutical company. So it's drawing on the cash flow of the company, and it's I guess taking away from those earnings, but bearing in mind it's adding to future value. So with exploration, just because it's not generating income in the present moment, that does make it more vulnerable to cuts. And that's what we've sort of seen over the last 10 to 15 years. A lot of the mining companies have cut back on exploration, and just sort of focus more on production and maybe near mine development. So I guess the broader implications of that, I think I read something recently. S&P Global put out a sort of global research report on exploration activity around the world. And the interesting thing from that report that the grassroots exploration as a share of overall drilling budgets around the world has fallen from around 50% in 1997 to around 20% today. So that's a huge cut in the allocation that companies are spending on sort of new discovery. And I think that just shows that their appetite, their risk appetite for putting capital into these new or trying to make discoveries is really declining. And I think that's where we'll potentially see some supply issues in the years ahead.
When you said supply issues, my ears pricked up because this implies that those companies that have been spending money on exploration and have been finding good projects are now sitting pretty in the market. In fact, you've identified them as potential takeover targets in coming months or years, and you put together a list or a short list or a report, I'm not sure which sums up what these opportunities might be. So can you take us through some of that?
Yeah, sure thing. So it's a report. We've detailed certain companies. So without going into too much detail about these companies, essentially it's focusing on junior mining stocks with large undeveloped projects. So this is what I would deem as the sort of key stocks to own when majors are looking at sort of resupplying their aging deposits. Bearing in mind they haven't been spending on new discovery, they haven't been resupplying their sort of depleting assets. Remembering that mining gradually depletes over time, so miners either have to explore to resupply those resources, or they need to buy new projects to keep up with their annual output. So really, given the timeline, the lack of exploration over the last 10 years, I think the key issue now is to actually acquire these projects to maintain output, not just grow, but just to maintain their output. So I think that's where these junior miners, not necessarily explorers, they already hold a deposit in the ground, it's a known resource, perhaps some further drilling just to shore up, to maybe get that to a reserve status. So these I think are the key projects to focus on. They're still heavily undervalued by the market. Junior mining stocks across the board have been at sort of depressed levels for a long time now, and I think this is where investors should be focusing, and perhaps at certain types of commodities which just have a sort of a more scarcity factor, things like copper, even gold, silver, those types of metals, which are very limited in the scope of trying to find new deposits.
So if you'd like to find out which companies are on James's shortlist in that report, there should be a link either flashing up at the bottom of the screen or in the description below this video for you to click on. But before you do, Make sure you check out James's Fat Tail Daily article for today, also linked to below on our website as well. And if you like James's work, maybe you'll subscribe for free to receive the Fat Tail Daily article in your inbox, again for free, every single day. And if you don't like it, feel free to comment and tell us why. I'm sure James will love replying, especially to the rudest comments out there. James, thanks very much for joining us today and sharing all this. And to everyone at home, thanks for watching. Before you go, I have another announcement. Our publisher Woody has promised me a $10 million bonus if I can double the number of subscribers to Fat Tail Investment Research's YouTube channel. So please like, share, subscribe, and send this video to all of your family and friends. Let's give Woody a nasty surprise when he comes back on the 23rd of September.